Hey, this is Jim Sharpe along with David Fischer, the CEO, the founder of Landmark Capital. David, good to talk to you again as we do this socially distanced. Markets volatile this week. I think we saw the biggest drop since March, which of course had some historic drops on the Dow. It was like more than 1,800 points yesterday, and then it's up today, but it closed up less than a third of that loss. This is just a sign of the volatility out there right now, isn't it?
We're talking 6.9% on Friday. The market definitely is booming. Yet many want to argue, Jim, that this is the highest overvalued market in history. If you look at it basically back in October 2019, what you call the P/E ratio, price per earnings, in other words, if the stock, how valuable it was compared to how much money it's making, it was a number at 17.4 back in October last year. Today, with the market at the same level it was back in October, is at now 21.6 or 24% higher, which is why we saw yesterday a big pullback in the market because some people are saying, a lot of analysts were saying, this is an overvalued market. You know, right now we're in probably the craziest markets I've ever seen in 26 years with these big yo-yo fluctuations.
Oh, yeah.
I know popular ideas are for the markets to pull back and retest, while others are saying, you know, there's going to be a major downturn, and some are saying there's going to be a major upturn. So the environment is absurd. And here's a good one for you. I don't know if you heard about Hertz. They filed their bankruptcy.
Yeah.
And while they're in bankruptcy, Jim, they just asked the judge if they could issue $500 million of stock in a bankruptcy.
What?
Their stock soared 52% in one day.
Oh.
I mean, come on, investors. The company's in bankruptcy. I mean, it's just, this is insane.
Wow, it really is. I mean, sheesh, you need Mylanta if you got all your money in the markets right now. The debt and the Fed balance have increased, and that's affected gold, hasn't it, David?
We're going to see the Fed balance sheet increase another $1 trillion real soon. It already increased $1 trillion in 1 month. Never happened before. But the numbers are staggering in the debt. National debt now, going back to September of last year, has risen $3.4 trillion. Now at we just clicked the $26 trillion mark. They're expecting to reach another $2 more trillion at $28 trillion by the end of the year. On the contrary, the Fed balance sheet has exploded up 3.8 trillion to 7.2 trillion. I know these numbers are just staggering.
Oh, I know, yeah.
Expect it to grow almost another 4 trillion by the year's end. I mean, this is very good for gold. Let's put it into perspective. Nixon in 1971 took us off a gold standard, and the monetary system expanded 6,000% since 1971. Big number, but that's what it's done. Yet gold usually moves tit for tat, and it's only appreciated 4,500%. So it's slightly undervalued in compared to the debt and the monetary system. So either the money system needs to go down, in other words, pay our debt down, pay the Fed balance sheet down.
Yeah.
Gold needs to shrink up or go up to get in line with the historical correlation. I think we're going to see a rise in gold, and that's why we're seeing a lot of analysts saying that.
You know, there's a Republican in the White House for the first 2 years that President Trump was in there. He had both houses of Congress. Yep. Republicans are supposed to stand for fiscal responsibility, but we have seen the debt explode. And I'm guessing, I'm just going to take a wild guess here, David, we're not going to see the debt paid down anytime soon, are we?
Probably not, because where's that Tea Party that was so passionate about, you know, our government overspending? And now we're, what, $2 trillion in our budget deficit? It's just insane.
Yeah, it's kind of a joke, you know, as we're fighting with China over trade and now coronavirus and all this, they hold so much of our debt. Let's talk a little bit about the myths and the misunderstandings about gold and silver, because I know a lot of people out there, they're not really sure. They may have heard about it, but, you know, in their mind, it's some guy who goes out and strikes it rich with a pickaxe.
So, you know, if you took some gold and silver to the grocery store, Jim, and try to buy groceries, they're going to look at you like a deer in a headlight. Obviously, it's not money. So there's a difference between the dollar becoming worthless and the dollar becoming worth less. We're going to
Mm-hmm.
go that route, worth less. And
Okay.
that's why you hedge yourself against the dollar. Neither would you take your stocks, CDs, bonds, or mutual funds to the grocery store.
Yeah.
You're going to not take your gold or silver. And the dollar runs by an index. It's currently today around 97, not 97 cents, 97 points. The high was 104 here recently. The lowest it's been in my lifetime is 78. And what we're going to see is the index come down and gold and silver compensate and go up while the dollar goes down. So, you're not going to use your gold and silver in the grocery store, but a hedge against it.
I actually suppose you could use gold to buy, groceries if you were like on Little House on the Prairie or something like that. That probably did that all the time there. What if your stockbroker, your financial planner is telling you, don't get into gold? What do you say to that?
I have a lot of respect for them, and I like stocks, and financial planning is very important, but yet they usually don't understand gold and silver. It's not their role, and therefore, because of that, Jim, they're not going to recommend it. If they did, it would take actually money out of their pockets. It's called money under management. But think of it a second. If you had a tooth problem, you go to your dentist.
Mm-hmm.
But if you have a heart problem, you're not going to go to your dentist. You're going to go to a cardiologist. And the
Right.
heartbeat, the financial system, which is the heartbeat of the whole thing, is in major trouble. I mean, with the debt. And so this is why a stockbroker, financial planner, is not going to comment on gold or understand it. They don't even see most of the time that there is a financial problem underlying all this.
And it's kind of scary. It really is. If that's the only place you're getting your advice. I've heard people say, and I'm not going to mention names. They might be financial planners. Gold's a bad investment. All you have to do is look at 2012, and that'll tell you gold's a bad investment, David.
Well, to be a billionaire, you got to invest correctly over a long period of time. And I've never seen so many billionaires now coming out of the woodwork recently in the last 2 years and are passionately saying you got to have some gold and silver in your portfolio right now.
Mm-hmm.
As far as performance, the gold's like a light switch. It goes on and goes off. When it went off in 2012 and dormant for 3-4 years, it was a bad investment from a technical moving up strategy. But if we went back to August of 1999, the Dow was 11,090 points, and now it's currently 25,400 plus points, or an increase, Jim, of 129%. That sounds just great. Sounds like a great investment. Compare that to gold. August of 1999, the Wall Street Journal said on the front of their headlines, "Stay away from gold, it's lost its luster." And gold then was 252. The very bottom of gold is when this news headlines flashed. Now it's 1734 today. That's an increase of 588% compared to stocks being a lot less than that. So I would say gold has shined much brighter than stocks. And now is the best time to happen to get into gold because of our debt. That's when it does the best.
Yeah, now's a great time to be in gold, but times like this are always a great time to be in gold because they're not going to pay off that debt, and this market is just going to keep doing the yo-yoing it's doing. So tell me about this real quickly, your white paper on the coming bail-in and how people can get their hands on it.
So the coming bail-in talks about a strategy that has already been implemented in 8 countries where they went in to seize, Jim, a portion of their bank account, their pensions, the equivalency of their IRAs to pay down their debt structure or to bail out their banking system. And so in 2010, we passed a law called the Dodd-Frank Act that instead of bailing out entities, we would do a bail-in, which the government has now legal rights to your IRA, 401k, bank account, any asset according to Fox News. And I got a white paper on it. If you want to call in, get on the list for the 8th edition coming out. You can reach us 602-287-9200, or you can go to our website, landmarkgold.com. And it's information is knowledge. We believe in education strategy. So get informed because your money legally is not yours anymore, unfortunately. Sounds crazy, but it's on the government website, and I cite that.
I have to point out, I love that you are all into educating people, because you're not hiding anything that way. And it just makes people comfortable and puts them in the position of making these decisions for themselves with a little help. That's all. By the way, go to youtube.com. Well, you might already be there, and type in Landmark Capital and subscribe, and you can hear more of David's and my conversations. And you have conversations with a lot of people about a lot of great stuff. But once again, to get that white paper and to learn about how gold can help your retirement funds, call 602-287-9200 or go to landmarkgold.com. I'll talk to you soon, David.
Thank you, my friend.
You bet.